So today's video I want to talk about double tops and triple tops, double bottoms and triple bottoms. Specifically not from the aspect that they always work. There's no such thing in markets that something is always working. There's just no such thing. If people say that, run, don't walk from them. And so this video is actually more so about me trying to provide a framework for why people use these patterns in the first place and maybe how you can use them. Even if you're a long-term investor, you might find them useful. That's the whole point of this video that I'm making. And as you know, I've been in this industry for over a decade now, so I really am just hoping to provide all the things I've learned or have observed. Now, I'm looking at a chart of NVIDIA here, and I want to go through a double top, but at the same time, a triple top. So the first thing I should tell you about a double top and why I do find them funny is most of the time you don't know it's a double top until it's already happened. And if the double top has already happened, that means you're late and you should just be thinking now about a triple top, meaning I sort of could make an argument that there's a double top here. It doesn't connect perfectly, right? This wick is a little higher than these wicks. But there's sort of an element that, right in this zone, there was selling here. Look at this candlestick. If you don't know what candlesticks are, I go through them in detail on my YouTube video, so go watch that. But you can just see this candlestick. It hit that price, and then it dropped all the way down to this level here. And then when it got back into this zone again on two different occasions, you can see the wick sold, and now we're red again today. Same zone, similar zone. But remember, it only exists because it already happened. So how am I going to trade this double top now? The real question in the way you can use this framework is, well, if this area is turning out to be a level of resistance, then maybe it is eventually going to be on pace to become a triple top, which would require it to retrace and then come back into this zone. At that point, the triple top has happened. Now, the only other way to use this chart pattern or to try to take advantage of it, if you're not observing the double top as it happened and looking forward to the triple top, is to try to play it that, the double top has occurred, but it hasn't retraced yet. And maybe on average, double tops always retrace a certain percentage. So in your eyes, then it's a short. And that's sort of the framework for you to use double tops. There's no get rich quick scheme. There's no obvious trade. There's nothing that's here that's going to be, it's going to happen no matter what. But it's a framework to try to spot where the resistance is or where the sellers are. For whatever reason, price has entered these zones on now three different occasions, and on all three occasions, it has shown that price has gone down. So someone's selling. There are more sellers than buyers. Who knows? Maybe they had their targets there. Maybe it's reached max valuation. Maybe it was just someone's goal from the start to sell at those levels. So it's just a way to try to understand the supply and demand of stocks and what prices are attracting more selling than buying. And those are really the key ways to think about these types of topping patterns. But I would say that they don't always work. I think one of my favorite examples is gold. And the reason why gold is a just remarkable example to me is that if you go to a monthly chart and go back in time, so you can't really see this here, but say we go back in time to about June of 2023, you can see that a rather epic triple top occurred. This is one of the most memorable triple tops I've ever seen. I will be using this in many different examples throughout my trading history. But the point here is that you're already late, actually, because people don't really measure quadruple tops. I don't know what the success rate is there, but the triple top has already happened, and you have now missed it. So what you need to be thinking about actually here is what's next, because there was selling here, there was selling here, and once again, two wicks. Now there's 2 points of selling here, two different wicks. So you have to be thinking about now, really, well, what's next? And I suppose you could play this from a standpoint of, does it make sense to buy again just to go into the triple top? Or does it make sense that it might consolidate a little bit and take its time until it gets back up into the triple top zone? So that's one way to think about it. And, we'll just play it out. I already saw the history, so I don't recall. Maybe I'll get it right, but just from memory. So actually, we'll extend the triple top, by the way. And we'll just let this thing play out. I think if I drew this, wow. Okay, so this is the other thing about these types of patterns that's pretty fascinating. The more they don't go away, the more likely it is that they're going to get broken. So a lot of people might tell you, so these triple tops in this example cause quite a bit of selling. Maybe there's a lot of social media posts. Maybe people are claiming they always work. But actually, it's pretty fascinating that gold hit it here back in 2020, went sideways for a while, hit it again in 2022, went down sideways for a while, hit it again in 2023, then went sideways, hit it again in 2023. It basically isn't going away. So that kind of tells you the pattern is maybe falling apart. Gold's just not giving up. It just keeps revisiting it. And what's pretty amazing about that is by the time it does break through, wow, look at that. You can make the argument that gold survived. It exhausted all of the sellers. Of course, it took from 2020 all the way to 2024 to get there, but it made it. And that's a pretty interesting way to look at this. But I think the key point I'm trying to make about these double tops or triple tops is oftentimes if you're charting them, they already happened. And so what I would tell you is that it's probably a more interesting scenario to use these patterns to try to look ahead, to be prepared for that double top or triple top before they happen. So a great example is here's the NASDAQ 100, QQQ, kind of a messy chart at the moment. And I would say that there's something brewing here in these levels. So right now it's at all-time highs, or it's just coming off all-time highs. So if I zoom out, it's just been in a bull run. But you can see here now there's two levels of recent memory where someone's been selling or just not as many buyers. You can see it's right here about $448 a share. Oftentimes these big round numbers play a role. You could even say it's getting close to $450 a share. That's a big round number. It's memorable. It's easy to say, hey, I'm selling at $450 a share. And you've now missed the double top. So the proper way then to think about this is to map out your trade anticipating the triple top. So how could you think about this? Well, what you would want to essentially do is try to use prior price history. Use the statistical evidence at hand. How many times across all symbols on this universe has, price hit levels like this, then retraced and come back to visit such levels? And how many times did it take to break above? Well, if you can think about that or model it or look back in time, back test it, at least now you have a framework. Rather than just buying and selling randomly, you sort of are getting ahead of what might happen. You're not charting a double top that already happened. You're now using that double top information to try to see if a triple top is possible. Meaning you could buy here at 446, but the risk reward is not great because technically 448 might be your max profit target because a lot of sellers might reemerge at 448. So really there's no trade here possibly. It just doesn't look that bullish. And that's how you can use these frameworks to potentially make less bad decisions. That's what I always like to say on my channel, is just make less bad decisions. Now the same is true for double bottoms and triple bottoms. So here's a chart of Apple. I think that this is a fascinating example of a double bottom. Apple's got the bottom here, and it hasn't quite hit yet. So actually, this is a great example of you getting ready for the double bottom. I think if you can anticipate this correctly, not draw the double bottom after it's already happened, there might be an interesting buy level around here. It looks like around $169 a share. And if you think the double bottom will play out, you can have a limit order at 169. Maybe have a sort of trade off that bounce, some sort of retrace, then sell once that bounce has completed your target. And if you're still following Apple at that point, well, there's probably, now you can take that same framework into the sort of concept of the triple bottom. Maybe there will be a triple bottom now that you've already, if the double bottom plays out, maybe there's a higher likelihood the triple bottom plays out. So this is how to think about these patterns. They don't always work. There's no such thing. But they are sort of the research you can use to map out potential future events, just so you're a little more prepared. And the whole point of it is that price has memory, and oftentimes you're trying to gauge what sellers and buyers doing based on what they did before. After all, markets are run by human beings, just like you, just like me. And we have habits, we have patterns, we have plans. And sometimes you can see those habits and plans and patterns in the chart. If everyone was buying at 169 back here, maybe everyone's waiting to buy again at 169 if it comes back. And that's just sort of a pattern repeating itself. You go, maybe you go to the gym every day. Maybe you sort of wake up at the same time every day. Sometimes we also apply those habits or repeating patterns to markets, and buyers and sellers just have those patterns on automated mode. So that's the key point, in my opinion, to double bottoms and by that matter, triple bottoms, but also double tops and triple tops. If you're drawing the patterns after they've already happened, I believe that you've missed the move and you have probably miscalculated, and it's too late. It's a cool insight. It's a cool chart to share. There's something fascinating about that. But the point is that if you're going to try to use double bottoms or triple bottoms or double tops and triple tops, you want to be ahead of the movement. You want to be predictive. Where could it happen? If you are drawing it late, you probably have already missed it. And I think the gold chart was a good example of that, because I recall just countless people who were essentially, let's say right here, right? So here's gold on this chart, who were essentially sharing charts about this triple top. And they were saying that is the biggest triple top ever. That is a huge triple top, 3 years worth of price action. The problem here, though, is that this triple top has already happened. In fact, you can even see just right on the chart that the triple top happened. You missed the move and then it dropped. That was the trade. You missed it. It's gone. So what's the next trade based off of that information? Well, that's where things get a little more complicated, and it's where maybe it makes sense to actually step back, maybe you've not traded at all, or try to go find that next double top that's happening or double bottom that's happening. And that's really the point of this video, is that if you're going to use these patterns, you have to be one step ahead. Just have to. And you have to be planning out that chart or trade in a predictive way. With one caveat, and this is where trading is really difficult, and it's where people just have it all wrong. There's no guarantee it's even going to work. Quite frankly, I don't even know what the statistical percentages are of these trades. It may not even be in your favor. But at minimum, you're at least slowing down. You're analyzing prior price action. You're not just randomly clicking buy or sell. You're at least trying to understand what everyone else is doing in the market. And hopefully, that'll lead to less bad decisions, because after all, I believe that impulse trading is just the worst of the worst. In my whole career of markets, in my whole career talking to people in markets, impulse trading has consistently been the trading that has, really wrecked people. There's been no plan or no research. And while I'm not saying anything great about double bottoms or triple tops, I am saying just by trying to be ahead of them and mapping them out, I do think it's possible to make less bad decisions. So with that being said, thanks for watching, and more videos are coming. Please subscribe.